Testing. JB here. April 3rd, 2024. Just going to get on, talk really quick about, where do we have these up here? First, talk about the markets. Spotify, DELL, going bonkers. The pot names, talk about the GLP-1 names as always. Talk about RILY, I talked about it yesterday. And I think that's about it. So first, I put on the watch list, and I keep saying put on the watch list, but we had the three-headed monster, right? That seems to be rearing its head. You have the higher rates, we have rising oil prices, and we have the stronger U.S. dollar, and they have all been rising in tandem. And that setup was pretty much what happened back in the fall, when near middle September, when we had the big pull from 450 down to 406 on the SPY before bouncing. Not saying we're going to have a deja vu scenario here, but certainly want to see yields either flatten or start to recede a little bit. And you don't want to see oil go too much in a way upside. I know some folks here are bullish oil, which is fine. Maybe we have a two-headed monster, we'll be fine for markets. I think the three-headed monster would cause some issues, right? Everything costs more when oil goes up. A lot of products, a lot of different things for components are manufactured using oil. So it's not just cars, right? Plastic, all that fun stuff. So we'll have to see how that all plays out. Take a look at the SPY, and I talked about that 518.40 area as support. The market broke through that yesterday, then bounced, closed at 518.70 or so. I think it was 518.70. And then today started in the red, bounced here 517.50 or so at the open, and here we are at 520. So is this just a little bounce before the next leg to the downside? I mean, it's certainly possible. I would love to see that 518.40 handle hold for the rest of the week, and then maybe we can work on getting into the lower 520s into Friday. You had Powell today at 12:10 at Stanford. He had some prepared remarks at first, and he had an interview. Nothing mind-blowing, no market-changing comments. So that's kind of out of the way. There's a lot of Fed speakers today. Some of them already went. I think the last one was at 4:30. So hopefully that gets out of the way. And then Friday we have the jobs report. So I'm hoping somewhat of an inline number, no shocking surprise to the upside or downside. And then maybe, we can start to work back to the 525s on the SPY, and then we have earnings next week. So that's kind of the market in a nutshell. Today's a good day here, especially after yesterday's drop. I mean, Monday it seemed like everybody called the market crashing or selling off, and the S&P was only down 0.2%. Yesterday a little more drastic. I think it was near 1% at times. The small caps were down over 2%. So you can kind of give a little more credibility to folks who were calling a big pullback. But here we are bouncing, and it seems like every time we have these pullbacks, everybody says, oh, here comes the big crash. And then you look back a week later and say, wow, that was just a small little blip on the uptrend. So that's the markets. So Spotify, and I've had Spotify on the watch list for the last couple of weeks, especially after that Bank of America upgrade, and tried to pull the trigger a couple of times. And finally yesterday it was showing strength in the afternoon, relative strength in spite of the market being weak. So I said, wow, I mean, this might be a sign here that Spot's ready to start to retest those highs. And then sure enough, what happens? This morning they announced a price hike and a new subscription tier. I think that just bodes well for the company. Typically, and we've seen this with Netflix too. Netflix, when they raise prices, people say, oh, they're going to lose customers, they're going to lose this. Netflix never lost customers. If anything, the subscribers remained on the same trend, if not better, and their profits got better, right? I mean, back in the day, Netflix didn't have profits. They were losing money. You had Zero Hedge every earnings call saying that they're going, they have billions in off the balance sheet content debt obligations. They're going to go bankrupt. And now they're a cash cow, right? They're so profitable. Not saying the same thing with Spotify. That's some of the issues why Spotify has struggled over the years, because they're not really profitable. But here's a step in the right direction. If you're a shareholder or you're an analyst and you're saying, wow, Spotify, you need to get profitable, you need to start generating some serious cash, raise prices. And then we'll see if they lose customers. I don't think they will. You saw the stock up in the pre-market. It's up here at 6% or so. Lucky enough, I was looking at the 280s. I got the 285s. They looked inexpensive on a risk-reward basis, even without hoping on news. And quite honestly, when I look at Spotify, a lot of times a Thursday, the calls that are only 3-4% out of the money would be substantially more expensive than when I got them. So that was kind of the premise behind adding the calls, and I got lucky, right? Sometimes I'll take luck over skill any day of the week. and so it gapped up, locked some calls in right at the open, and then it's still higher than when I locked my calls in, but the premiums are starting to drip a little bit as they expire on Friday. The volatility is kind of coming out of stock as well. So I'm probably going to lock the last of my calls in because you never know what could happen tomorrow. And then I'm not sure if I'll add more strikes yet, but certainly name I'll watch because I think it's headed, 290, then possibly over 300 in the coming weeks. So that's Spotify. Lucky there. And then here's DELL. And, I put on the watch list yesterday as well that I thought, if the market was selling off, I said if DELL gets down to 115 or so, I might salvage the position and revisit. And sure enough, DELL sells off at the open, the quick dip into the 115s, and then it bounced to 116 or so. So I held the calls. And thankfully, I was lucky I did as well. And it's just rampant today. There's no news, there's no catalyst. You take a look at a name like SMCI, Super Micro, that you would think if DELL was up 8%, SMCI would be up 5, 6, 7, or even more percent, and it's not. So some of it I think is technical. You have that tight Bollinger Band breakout. Tight Bollinger Bands, and now it's a breakout from those tight Bollinger Bands. I mentioned it before. I'm like, I could see this going to 135 or so. So I locked a lot of my calls in already. And what are the 130s? $4 now. Let's see. I haven't looked since it broke 129. Yeah. So I've plenty of time on the April strike. So I might just wait. Yeah, they're 490 now. 470 by 490. I might just wait for the 130 break, and I think it heads to 135. So I'm probably going to hold for that. Again, my bull case on DELL is that it still hasn't baked in what's going on in the growth with AI. And you see Supermicro obviously is a tremendous growth story. I'm not saying DELL isn't, but it's not really yet. And I think if it just captures a little bit more of that market, it's going to be 150, 160, and so on. So big fan of DELL. Continue to look for opportunities to play DELL for upside. Cannabis names, and I talked about them yesterday as well. ACB is playing catch up, just like I talked about yesterday. If it keeps on this path into Friday, it's going to catch up to CGC, up another 37%. Got some of those 7 strikes, which expire in 2 weeks. So I have 2.5 weeks to hold on to those. I already locked a lot of them in. The last batch for 500%. I think this trend continues. It seems like every day there's a new headline. Yesterday was the Florida Supreme Court putting legalization for cannabis on the ballot for November. I guess the board, someone from the CGC, a former director, is on a board of cannabis in Canada or something like that. So there's just a lot of great forward catalysts for the space in general. CGC is over 9 here. I think it heads over 10 before the end of the week. I'll continue to hold those strikes. I'll probably just sit on my hands, add anything more just yet. But I think these continue to head higher. The only issue is IIPR, which I would have thought would be rallying in sympathy with these names. It's not. And I think some of that, and I mentioned it yesterday, is because it's a REIT, and some of these REITs have been taken on the chin the last couple days. IIPR is right there at 100. I'm still hopeful that it breaks back into the mid hundreds and then over 110. But I would have liked to have seen it do it today. But still plenty of time in the calls as well. So that's the cannabis names, which brings me into RILY, right? So BR RILY, it's pretty much a boutique investment firm. It does a whole array of different things. It does leverage buyouts. It has a wealth advisory branch. It has all different levels of things that it does. And it brings a lot of revenues, $1.4 billion, although that was lower on a year-over-year basis. But it has a 76% short interest because there's people, and it seems, and I hate to use the word, it's not a great word to use, but I've used it before when I talk about some of these concerted efforts of these folks who are short to get all their little buddies involved to try and pressure the stock however they can, right? If you're bullish, you're manipulating the stock, but if you can short the stock and double sell, right? There's a 76% short interest. So not only have people sold the shares, but there's 12 million shares that have been sold short on the 16 million share float. So it's manipulation. But I call it the circle jerk. He rubs his back, you rub his back, you rub, and then until it comes to fruition. It's like they created this story around RILY. Now they're so far into it that to get out would cause a serious squeeze. And CGC is going nice here. So I don't know. You see the call and put volume today, just a tremendous amount of volume on the, why is this, come on, sorry folks, a tremendous amount of volume for such a stock that's not really, it's not an Apple or a Google. 42,000, let's see, whoop, wrong one. There's still a lot. It's not 42,000. 20,900 calls have been traded today, and 12,600 puts have been traded today. That's tremendous. Almost 34,000 option contracts have been traded on a stock that's only valued at 600 million. It has $600 million market cap. I can do the notion. I would have to add up all the strikes to get the notional value of all those calls and puts, but I bet you it's in the hundreds of millions of dollars. So I'm not going to sit here and say, and the 12 million shares short is, what is that? $400 million of value is sold short. So I'm not going to sit here and say this is the best company, fundamentally sound, huge growth company. I just think there's an opportunity. And I think if they come out with their filing by April 31st, which they're going to do, and if it comes out somewhat clean, I think this thing could squeeze. And I think it might squeeze beforehand. 35, 40, 50, maybe even higher as people get on board. But I could be wrong. So I just got a small position. I may add some of those 35 strikes if it breaks 25, just because you do this long enough, you see some of these plays, and then you kick yourself a couple of weeks from now when it comes to fruition and you're not on board. So that's kind of my thought process there. At the same token, they don't come out with their filing. There's an investigation, SEC, all FTC, all these folks come in. It could be an issue, and then the stock will sell off, and then obviously my calls will be kaput. But that's kind of the risk reward, right? So the risk is taking a small risk on call options. So your risk is limited, but if it squeezes, some huge profits. So that's kind of the thought process there. So that's RILY. I know there's a huge short, a lot of people who write publications, short pieces on different stocks. It seems like they're all in it. So some people make the case that, wow, there's so many smart people short that it must be true, and maybe it is. There's certainly some inconsistencies and some red flags, but I don't think it's a red flags enough for it to go to zero. And just little things you learn over the years, right? So I go and I check their investor relations, and then you go and you see they're hiring. They just posted another job today. So companies that are cutting jobs, worried about costs and all that stuff, would they be hiring? And there's a whole slew of hirings over the last 7 to 14 days, new listings for job openings for B. Riley. So, hey, maybe that's nothing. Who knows? But when I look at some companies and you say, wow, are they doing well? They're not doing well. Typically, companies not doing well, they're not going to be hiring people, right? They're going to be doing the other way around. They're going to be cutting costs, cutting expenses. And this is not a company that creates products. It's not like they have a manufacturing plant where they have to staff 20 people all the time to make the product. There's a wealth management company. It's pretty easy for somebody in an office who has 20 clients to get let go, and then someone else picks up those 20 clients. So now it's one person doing the work of two people. That's a little easy. It's a little more rational to do that if your company's struggling than to actually hire people. So again, I'm just giving you some of the things I look at that make me think, not that this bear case is completely garbage, but I think there's some cracks in the bear case, and if there is, the stock's going to squeeze. So that's RILY. Who else we have here? Oh yeah, the GLP-1 names. Just a horrible day yesterday. I put on, it says, I said it yesterday, weight loss drugs are losing their enthusiasm. And that was just after one day to the downside. Hopefully some of the smaller names start to go. VKTX, after hitting, I think it was 72 or so yesterday morning, back over $80. Just waiting for, hopefully there's some M&A news before April 19th expiry. Plenty of time there. If not, I think you still have a bull flag setup. Gets to 105 at least, and maybe it gets momentum and keeps going. So still bullish on VKTX. TERN has been completely disappointing the last two sessions. After the positive market watch piece on Friday, down here at 618. At some point, that's going to go as well. With Shopify spiking, let's see. I don't have that on my main watch list. It just looked like a little spike. Yeah. So those are the GLP-1 names. I can go on a rant for a while on those, but I always do. So there's not really much that has changed there. CDLX, God, just so disappointing. I talked about they filed that 8K on Monday explaining the convertible notes. I really, it's tough for me to wrap my head around it trading here 13.12 when it was just, closed at $20 the previous week, and nothing really fundamental has changed besides the fact that the company bought back their 2025 notes, the remaining amount, and then rolled out to 2029. The issue is, or maybe some of the issue was the $200 million note was at 1% interest. The I think it's $175 million note for 2029 is 4% interest. So instead of paying $20 million in interest payments, they're paying 72 million, well, round up 73 million or so in interest a year. So does that 50 million difference in costs, interest costs, does that throw some of these models and these analysts out of whack? Because it's like, wow, we didn't bake that cost into our, EPS and guidance and growth and into our models. I don't know. I really can't wrap my head around anything else that would cause it just to be sitting here. So maybe it needs a kick in the butt. Hopefully we get some kind of analyst upgrade or some news of another customer, another vendor. That would be great. Still bullish name. Once it starts finding its footing, heads over 15, I'll look to get some May strikes on Cardlytics. I'm trying to think. I think that's about it. I was looking at BPT. I mean, it's going back years ago, 10 years ago or so. BPT used to be $130. I don't know if you classify it as a REIT, but pretty much there's an oil field up in Alaska, Budo field or whatever, that supposedly only has whatever million barrels left for them to drill, and this trust pretty much just spins off the profits from how many barrels they get. And I forget what it is, but the price of oil has to be at a certain threshold. So it used to be $40, and then every year, I guess part of when it came to inception, this BPT trust, they laid out groundwork, right? And so I think every year the ceiling for oil keeps going up. So now it's at $82. So the price of oil has to be over $82 for the 3-month period. And then whatever it is over that, so let's say oil averages $90 a barrel, there's an $8 difference, and then that 8 gets multiplied by how many barrels of oil they get out of that oil field. I think they did 90 million barrels last quarter. So you're talking, that's a decent amount of cash. That'll get paid out as a dividend. The issue, oil hasn't been over $82, so they haven't paid a dividend in the last 3 quarters, but now oil's over $82. So you see BPT going up. I've traded it before. I mean, if oil keeps going up, it's going to go bonkers again. So if you see me post in the chat room, that's kind of why I'm trying to sit on my hands, because oil could reverse. Not only that trust, it's up in Alaska, that oil field at some point is going to run out of oil, and then the trust just can be dissolved. So, and I think if oil's under a certain price for 6 quarters, I think it gets dissolved as well. So anyway, that's a rant for another day. So that's BPT. I'm trying to think of some of the other names I've been looking at over the last couple days. I think that's it. NNOX Imaging, ticker NNOX. I added some speculative calls today. So if you don't know NNOX, it's pretty much an MRI company. I think it's based in Israel. They're trying to get a new way to do MRIs. MRIs are a big business, right? And only going to get bigger. They're also looking they're looking to have technology, AI technology. So when you get your MRI, you're going to have a program that's just going to analyze that MRI right off without having to send it over to a doctor, specialist, whatever, who's then going to analyze and write their report and say, oh, there's a nodule here, this is big, this is small, this is the size of this. And, that's a big deal. I think that not only would it save costs, right? It will save time for doctors, will save time for the MRI, save time for the customer, save time for the hospital. So it's a huge cost savings on all sides if a company is able to come to a solution for MRIs, or at least not a solution, to improve the experience, right? To disrupt that sector. So NNOX was all the way up, I think, in the 40s. Then you had people who, came out with these short pieces, say it's a scam. The company really doesn't have a product. It's not. There's no FDA. There's no patents or whatever. I didn't read the reports at the time. I read some of them because I wasn't in the stock. But it always looked interesting to me. And then back in February, when you had those filings from the companies, their holdings, 13Fs, one of NVIDIA came out and said they had a nearly $400,000 stake in NNOX. It's not a huge stake, but to me it's meaningful. Why would they even look to have any piece of this company unless they saw something, right? So I think they see an opportunity. I think if anything, it bodes well for upside, just as speculation. And I think they just reported earnings on the 1st. 2 days ago, the stock has been holding up, and now it's starting to rally and squeeze, has a large short interest. So I almost look to get the May strikes, but I'll just hold on to my Aprils for now. If it continues to go tomorrow, I may look for some more strikes. That's kind of my thought process and premise behind adding those NNOX calls. I think that's about it. Trying to think of some other names. I think that's it. Thanks for listening, folks. Let's have a great day. Rock and roll.